When you think about the year-over-year growth rate for 2026, we are talking about almost a doubling of the Capex. They were around 95 billion for 2025. So at the high end, we are, talking about doubling. Look,
that's huge.
After
we thought 2025 was a big year.
No, and after the Meta print, it became obvious that these companies are going to step up in terms of their Capex spend. So,
but this is but as you've reminded, this is different than Meta because Google can use this Capex to then sell to other companies for Google Cloud,
which actually saw a pretty nice sequential acceleration.
Meta Platforms doesn't do that.
Meta Platforms doesn't do that, but these companies also consume a lot of the GPU and the AI infrastructure capacity in-house. And look, they gave a token count number again, which I always look for. And
the 10 billion tokens per minute?
For their APIs. So that just goes to show the trained LLMs are being used in the real world. And in the case of Meta, yes, there is a higher uncertainty around how their GPUs are being used. But in the case of Alphabet, you see it in the print in terms of Gemini MAUs going up to 750 million, the API token count going up. So cloud revenues accelerating, search growing 17%. That's all AI overviews. Only thing that disappointed was YouTube. I just don't know why.
So that wasn't a disappointment.
There was. And look, Meta just came up with a quarter where they grew 25%.
Yeah.
And they raised the guide to 30% next quarter. So from that perspective, YouTube was light. And I don't know the reason why.
Okay, so that's certainly a question that's got to be pushed on the call. Going back to search, I mean, they talked about exceeding $400 billion for the first time, annual revenues in total, and you talked about some of the other usage points. So the payoff, the ROI, we're clearly seeing when it comes to Alphabet.
I mean, for a business that's a $225 billion run rate to grow 17%, and at an incremental margins of 70% or 80%. I mean, search margins are probably the envy of the world in terms of, how much money they print from search ads.
How come my Google Home is so slow, though? Because since they added AI, it takes forever to get an answer.
Well, I mean, look,
maybe you need a new Google Home.
Yeah.
Or you need to update that connection.
Yeah, right.
Our connection's pretty good.
Mandeep, fourth quarter Gemini app monthly active users, 750 million. Mm-hmm. The estimate was for 650 million monthly active users. What does that exactly measure? Is that people using the standalone Gemini app, or is that me who's never used that app and instead just using mobile Google search, but Gemini within Google search?
No, so they do bundle Gemini with their Google One subscriptions. So if you're a paid user, then you could buy their bundle where they will sell you cloud storage and other things as well. But these are standalone Gemini users.
And so we should look at this as compared to monthly active users for ChatGPT.
Yeah, 900 million versus 750.
What do we know about people who use Google's products the way that I use them? Which is like, recently I started using ChatGPT and Claude less because I've realized that the AI function within Google search has gotten pretty good.
Yeah,
when you look at it from like an LLM perspective.
And they just released this personalized intelligence, which basically connects their family of apps, Gmail, Google Search, Chrome usage to Gemini. So they can personalize a lot of things for you than just, you searching based on a prompt, which is what you're doing on ChatGPT. And that's the advantage that Google has, is their family of apps. And that's why Meta is really building their AI data center capacity, because if you want a personalized agent, you want to give them, the context around what you are doing and how you're spending your time. And Google knows that because of Gmail, because of YouTube, and all the family of apps they have.
Let's just remind everybody where we are. Alphabet blowing past investor expectations when it comes to AI spending. Reported fourth quarter revenue too that beat expectations.
Not typically a good thing.
No.
Blow past those expectations.
The Google parent saying it will spend $175 to $185 billion this year, compared with the $119.5 billion that analysts had expected. Fourth quarter sales, excluding partner payouts, were $97.23 billion, surpassing the $95.2 billion expected on average by analysts. And I'm looking at the stock in the aftermarket, as Tim reminded me, down as much as 7% initially. It was also, though, rallying, and now it's just down about 0.7%. We're talking with our own Mandeep Singh. We want to bring also into the conversation Dan Ives, Global Head of Tech Research over at Wedbush Securities. He also has the Dan Ives Wedbush AI Revolution ETF. Alphabet, by the way, is the fund's third biggest holding. Dan is with us from Miami. Good to have you here, Dan, with Tim and Mandeep. Your reaction to Alphabet?
Look, I mean, I think it's just further, I think it solidifies what's happening in this AI revolution. I mean, look at the spending, look at the monetization, and look, it goes back to look at this tech earnings season. Palantir, look at hyperscalers last week, as Mandeep talked about. I think to some extent, in terms of like this white knuckle, this nervousness that we're seeing, it just further solidifies the spending, the monetization, the cloud, the moves that enterprises are making.
Why did we see shares move all over the place, Dan? 7.5% was the initial reaction to the downside, and then you saw shares turn positive, unchanged. What's going on with the instant moves?
Look, I think these knee-jerk reactions, you know, especially when you're looking right after the print sometimes, I think a lot of times they're misguided. You know, I mean, you got to listen to the conference call. You got to see ultimately what, you know, when you kind of peel away the onion in terms of guidance as well as Capex. But look, I think it's very easy to get caught up in days like today, right? In terms of, or just even so far we've seen in terms of the last few weeks in tech. I think it's very important. Mandeep obviously talks about it a ton. What's the narrative? Is spending there? Yes. Is Capex accelerating? Yes. Are enterprises moving full steam ahead? Yeah. Look, and I think that's keys to the puzzle.
Is this how great, in your view, is this increased Capex versus expectations for NVIDIA and Broadcom?
It speaks to the narrative that we saw with Microsoft, that we've seen with Meta, we've seen across the board. It just further speaks to this arms race that's playing out across AI. And then when it comes to Capex, look, obviously AMD stock sold off, but again, this is like Rome wasn't built in a day. You got to think about this is multiple years, $3-4 trillion that's going to be spent. And I think that's the one thing where, you know, and I've seen it being at CS, being in Davos, Mandeep and I were there. The spending is unlike anything I've ever seen. You know, going back to late 90s in terms of spending.
Hey, I just want to point out shares of Alphabet, because they have been bouncing around here in the aftermarket. They're now down about 1.3%. NVIDIA, by the way, is up 1.7% in the aftermarket. You've been listening to Dan. Listen, everybody says these guys have to spend, these hyperscalers, right, in order to compete. Is there some truth to that, some reality to that? Because I feel like as these guys have reported, we get different market reactions.
I mean, in the case of Alphabet, not only have they trained their own model, but the Anthropic's model is trained on Google GPUs. And now you have got Apple saying they will use Google's chips. So 3 out of the big players are, I mean, we talk about applications and how good Alphabet is in search. This is about their chip prowess. And, you know, the fact that 3 frontier labs or companies are using Google's chips, that's a testament to their mode and how well they have integrated vertically. And the Apple thing is huge, I think. That's why they are really ramping up the Capex here.
Right.
Because they can see the demand just from one company. I mean, imagine if Apple wants to roll out Siri powered by Google.
I mean, that's what they're relying on, right?
I do think there is a lot of embedded business that's coming from Apple in that Capex guide.
Broadcom up by 7% after hours as a result of this print. Mandeep, you were doing some multitasking. You were looking at your terminal. What else sticks out to you from this print?
Well,
what are we missing?
I think after the Microsoft print, I thought maybe, you know, there were concerns around the cloud growth, and Microsoft talked about allocating some of their capacity to first party. This is a supply constrained environment, and everyone is trying to be very careful how they allocate that capacity. Every hyperscaler has that challenge, and that's where, you know, an Alphabet really is going big because they have $150 billion in free cash flow. they can afford to go up to 180 billion in terms of capex. Companies that don't have that operational cash flow, they are the ones who have to think about, okay, how much do I raise my capex? But Alphabet has that $150 billion operating cash flow.
Do you have a calculation, Mandeep, for how much of the infrastructure spend a company like Alphabet uses for its own services versus selling to third parties?
I mean, you can model it based on the cloud revenues that they are generating, and that cloud business is close to a $70 billion run rate business.
Fourth quarter
now.
cloud revenue, 17.66 billion, beating estimates of 16.2.
Yeah, so $70 billion annual run rate, compare that to an Azure, which is a $100 billion plus run rate. So, and you can see all these companies were spending capex close to each other. Microsoft obviously was spending more because they had that OpenAI partnership. But I mean, I would say 30 to 40% capacity in the case of Alphabet is getting allocated to cloud. And they are using a lot for AI overviews and their internal family of apps. And then the training component is huge when it comes to these LLMs as well.
Hey, yeah, go ahead, Carol.
Continue to watch Alphabet here in the aftermarket, now down about 2.3%. Dan, as you continue to look at this quarter, listening to Mandeep, what is it that you want to know more about when it comes to Alphabet's business right now?
Look, it's all about cloud. I mean, if you think this arms race going on between Microsoft, between Google, between Amazon, it's really trying to get a sense to what customers are going after. And like strategically, what are they seeing? The monetization. That's really front and center. Look, because as you said, as Tim talked about, it's not just about Alphabet. It's about the ripple effects across the sector to what we're seeing. You're trying to put pieces together in the puzzle. Looking so far, you look at the last few weeks, it's basically telling you spending's accelerating.